Now, let me quickly go back. Something is wrong somewhere. Let me quickly go back to the question. If we don't have the one that we buy internally, let's quickly check go back to the question and check. Now, class, the supplier is willing to supply this. Now, what the supplier is willing to supply will be based on the costs, the attributable costs that it will be used to produce that product. Class, let me come again. This is supplier quotes, right? The cost of the supplier, what the supplier will offer, will be the cost incurred in producing that particular product. Now, don't forget that in this question, we're given direct attributable fees cost per annum and committed fees cost. Now, direct consequence, you can see that the fees cost that directly to the production of that particular product, you can see 1,000, 5,000, 6,000, and 8,000. Now, we are not supposed to add the committed cost. Do you know why? Because whether they produce that product or not, they will incur that particular cost. However, it will not be fair enough when you are comparing with what you want to get from an external, and an external is quoting the price based on what he will use. The supplier has already add up his markup, right? Include his profit and the cost. I'm telling you that, okay, come, I will do it for you this. The cost incurred will be the cost attributable to the production of that product. Why the committed cost will not be included? It is because it is not attributable to the what? To the product. It is a sunk cost. Whether they produce that product or they don't produce that product, the cost will stand as what? 30,000 naira. So therefore, we are not supposed to include 30,000. I think that is what is making it not to have whether we will make one or we will sell one. Class, am I communicating? Should I still come again?
Yes, sir.
Please come again, sir. I joined the second class late. Like, I didn't join you.
Hey, you are supposed to introduce yourself, or you've not introduced yourself. So I will assume that you are 40% member. So remaining 10%, maybe when you introduce yourself. So now I said the committed cost. You are not here when we actually treat as relevant cost too. The fixed cost, which is committed cost, you did not incur it directly in the process of production. Whether they make it or they don't make it, they will incur the 30,000 naira. So therefore, it will not be relevant. It will not form part of the cost incurred in producing that product, because the supplier that is giving you this price does not include all their committed, does not include all their committed costs. We not include it. We only include the cost attributable to the production of that product, and as well as the what, maybe the markup, and add it together and say, oh, this is the cost I'm taking. This is the cost you need, right? That is why they did not even separate it. They say it is committed cost. So it is not even attributable to either bag, gab, or dip, or what. It does not even attributable to any of these products. That is why you can see, that is why they didn't even say, oh, this is for bag, this is for this is for that. Do we get that?
Yes,
Hello?
sir.
Yes, sir.
We did,
Yes,
sir.
sir.
So our mistake is
Yes,
that you
yes,
can
sir.
see. Okay, so good. Please remove the committed cost. So when you remove the committed cost, remove 7,500 from 22,500. What do you have?
We have 15,000.
15,000.
15,000.
Okay. 15,000.
15.
15,000. So we'll remove this. So the same thing, remove 7,500.
39,000. 39,000.
39. You can see that is why we didn't have because you can see it's very strange to me, and I have to look at it in another perspective. 39 what?
1,000.
$39.
$39. You can see
Thirty-
this is how, if you have been solving question before, this is how you will know that this thing is actually wrong, why you don't even have the one that you even get outside, and the question is telling you that either make or buy, and you didn't even have one. So it means there is something is wrong somewhere. What do you have?
44,000 for the last one.
Okay. $44,000.
For the last one, yes.
$44,000.
Then wheat, deep, is 34,000.
Okay, this is 34. Okay. You can see it is very strange to me that you will not even have the one that you will get outside. Everything will be okay. You will not even have the one that you will buy outside. You know, when we calculate that one, it shows that you have to purchase everything outside. So which is not normal, right? Sometimes it may be like that, but you have to reason it in another way, because I have to check it and say, oh, this is committed cost. Why is it that they did not apportion the committed cost? Why? It is because it is not form part of the what? It is a sunk cost. It does not form part of the making of bad, gap, and deep and weak. It's not a relevant cost. It does not attributable to what? The making of this what? The full product. That is why it is excluded in our calculation. I hope we get that. Now, in this case now, so what is the savings? Do we have savings? So we should also have a savings now, right? So now, if you are the one, so this is cost internally. This is, so cost savings, right? So now, class, are we still together?
Yes, sir.
Yes, yeah.
Okay, now, if you are the one, will you prefer to make this in-house, or you buy it outside, or you make it outside? You tell the supplier to supply. Which one will you do? So what is the difference?
I'll make you out.
Yes, you get it outside. So what is the difference? What is the difference?
The first one is
So 3,000
Now,
negative, $3,000, right? Which is what? Which is negative. Which means you have to get it
is three.
outside. Positive or negative?
Positive.
Positive. Now it will be negative. Now this is
Yes,
the
sir.
decision here. If the supplier quote is higher, is lower. If the supplier quote is lower, that is, you will get a negative, right? Right?
Yes, sir.
If the supplier quote is lower, you have a negative. But if the supplier quote is higher, is that not so? If it is higher, you have what? Positive. Now, what is now the decision? We will get there. Give me the difference. What is the difference? This is what?
3,000.
3,000. So this is what?
Next is 10,000. No, 8,000.
This is 8,000.
6,000.
Which one?
Thousand.
Class,
Deep is 6,000.
which one is 6,000, class?
Deep is 6,000.
Deep is 6,000.
2,000.
Next.
2,000.
2,000 negative.
Okay, negative. Now, what will be the decision here is that you should do what? You should make which of the product will they make outside? They will make which one and which one outside?
Bag and wig.
Thank you. So you will now write to the management that the management should do what? Should so you can now have okay, let me put it this way. Total, let me say total savings. Total savings. It will not be impossible. The savings and work of making. Should I do it like that? No. Okay, let me say cost savings. Okay, now the decision, please mute your mic. Who is that? Please mute your mic. Please, everybody should mute his or her mic, please. Please.
Wait, now they
So now, in this case, what is the decision? Decision. You cannot say the company would save 3,000 naira if bag is outsourced and 2,000 naira if wig
Sir, dollar or not
is
naira.
oh my me. I'm in Nigeria now. It is well. Okay. Dollar. If wig is outsourced, right? So if they have the spare capacity, then they have enough capacity. Let me put it that way. And also, and also, okay, let me just leave it like that. Wig is outsourced. Okay, therefore, the other one is the company. The company, who is that first? Let me make this person see. The other one is the company should make gab and dip, right? Gab and dip as they are profitable. Class, do we understand this decision?
Yes, sir.
Yes, sir.
Is it
Very
clear?
clear. Very clear.
Okay. So this is all about make or buy decision under the what? Under the short-term decision, right? This is all about what? Make or buy decision. Class. in summary, if at all make or buy decision will come as a decision making question, don't forget that 30% of your syllabus cover decision making. And if make or buy decision, for instance, you may see probably they may add it to one or two questions. They may even add it to limiting factors. Who knows? Then you just look at it. Look for the costs that are attributable to the products that you will use to produce that product directly. Then you look for the supplier's quotes, supplier quotes, right? Then you look for the difference. Now make the decision that, oh, should we make it or should we buy it? Depends on the cost. And that is all about what make or buy decision. Remember, we have covered relevant costing, accept or reject offer, make or buy decision. Now we will now move to what? Discontinued operation. Class, are we good? Are we good to go?
Yes, sir.
Question, please.
Yes,
Question.
boss.
Yeah,
Question,
who be your
please.
boss? They play. Okay, before you ask your question, Mr. Victor, before you ask your question, Bolanle Ibrahim. Bolanle Ibrahim, are you still on this call?
Yes, sir.
Okay,
Yes, I
please
mean,
okay, please kindly introduce yourself. We want to know you, your name and your location.
my name is Bolale Ibrahim from Lagos.
Okay, that's fine. You're welcome to Next Gen Professional Associates. You're welcome.
Thank you, sir.
No. Okay, Mr. Victor.
All right. So just a simple one. I just want to be clear. I think this attributable cost that you included, because from the relevant considered as relevant cost. Now, from the narration says that we are told that directly attributable fixed cost per annum,
In making
per annum and committed fixed cost. So
yes. Go ahead.
Hello?
Go ahead, please.
So from that, I think from the knowledge and therefore not to be considered. That's my question. Why do you consider attributable costs, whereas the fixed cost is not considered? That's my question.
Check. Okay, thank you. That is a very good question. Now you now check back from the breakdown given to us. From the breakdown given to us in this question, let me quickly go back. From the breakdown given to us in this question, look at it. Incurred as a direct consequence of making this. So, relevant. Incurred as a direct consequence of making. So, it is a direct cost. Mr. Victor, that is why we have to consider it.
It's okay.
Mr. Victor, okay. Do you get?
All right. Thank you.
Do you get the explanation?
Yes. Specific cost. Yeah, I think I understand now.
By $35. By 5. But apologies, I have a case study class by 5. Please assure down, go to settle down and prepare for the class as well. So please, we'll end this class by 4:35. Yeah, by 4:35. Thank you. Left with left with discontinued operation under the short position. After the discontinued operation, this will take us to throughput accounting. Throughput accounting will just take us one class, right? One class we are done with throughput accounting. We will spend little time in linear programming immediately after throughput accounting. Now, discontinue. What is discontinued operation?
When a company ceases to exist or
Okay,
discontinue. I don't know.
okay, that's fine. That's a very good one. That's a very good one. Well done. Now, discontinued operation is when the company ceased, either they cease part of the business, but there is always an implication to that, right? Hello? Sorry, my network. Please confirm if you can hear me.
Yes, but I can't see the screen.
Okay. I'll actually reshare my screen shortly. So I don't know what happened to the network. Just class. So discontinued operation means that you have products AB, right? You have product AB, and product AB is not actually doing well. Why? It could be because the cost in making that, it could be because the cost of making that product is high. Please confirm. Hello? Are we still together?
Yes, sir.
Okay, that's fine. So discontinued operation simply means that you have a product and this product is not actually doing well, probably as a result of the costs, one, or as a result of consumer preference or competitors. With that has made the product not to be sellable in the market, right? Now, yes, I've not shared my screen. I'm trying to do that. Now, sure you have the notes. Just look at the notes. If I can't share my screen, I'll just explain it, then we'll go. Please. So what I'm saying is discontinued operation is a short-term decision making. There is a product A and product B. Product A is not making, you're not making a profit in product what? In product A, but you are making a profit in product B, C. In this case, you could look at it, what could have been the reason why you're not making a profit in product A? Now, it could be because of the cost incurred in producing that product is high, is on the high side. Or it could be that the competitors of that product is high. It could be as a result of consumer preference or customer preference. It could be that the product have a substitute product, right? There is a substitute product for that particular product, right? Let's say, for instance, Coca-Cola and Pepsi. Is that also? There is a substitute what? Product. Now, in this case now, you can decide to discontinue that operation, because if you are making a loss there, your contribution, you can base your decision based on your contribution or your profit. You are making a loss, you are not making a profit, or your contribution is low, or you are having a negative contribution, which means that you are not supposed to hold this particular product. You have to discontinue that particular what? Operation. You have to discontinue that particular what? Product. Discontinued operation is not mean that you are ceasing operation of the whole company. No, it could be part of the business. It could be part of the product, not all the products. Now, in that case, you can discontinue that part, then you continue with. However, there is a limitation, there is an implication to that. If, for instance, you discontinued product A because it's not bringing a profit to you, and you go away with product A, product B, what about the customer in product A? The customer in product A, we go. Is that also? Probably they are the best customers so far. You don't know, right? So these are customers that actually will be needed, right? It may actually reduce, and you may even see some customers that actually they will, because of that product A, they will come and patronize you. They will come and patronize you, right? They will come and patronize product A and product B because of product A, and you want to discontinue the what? Product A, because it's not what? Giving you what? Profit. With that, you could lose a customer as a result of what? As a result of that, right? So that is what I just want you all to understand, the whole scenario case about what? Discontinued operation. Discontinued operation means that you want to cease part of the what? Part of the business, or part of the what? Part of the product, because it's not giving you the profit, or you are making a loss. There's an increase in the cost of that, right? What would be the profit if you discontinued product A? What would be the profit if you discontinued product C? And that is all about what? Discontinued operation. In our next class, we will look at a question that has to do with what? Discontinued operation, which is what? Which is on Tuesday, right? Now, our next class, which is on Tuesday, we'll look at the question on discontinued operation, full question on discontinued operation, so that when you look at it in a question, is even in the past question, you can check. They'll say, okay, if we want to discontinue product A, what is the profit of the business? Just remove the whole part of product A. Calculate the profit based on the what? Existing. Remove the product A and calculate the profit. Then you say the profit will be what? This particular. And that is the whole case of discontinued what? Operation. On Tuesday, we will look at discontinued operation calculation of it. And for those who are yet to get your material, like I